125 points higher on the Nifty.
So as we speak, we're up close to about, 3/4 of a percentage point, 17,743, again a 120 points.
Key today has been the Bank Nifty. We highlighted this in the morning as well, that yesterday the Bank Nifty sort of underperformed a bit and took, started the day at 5-day exponential moving average. It was a very strong day. The bulls in control.
Welcome to CNBC-TV18. You're watching Markets Today, the show where we track about 6 hours of the trading action in just 5 headlines. I'm Sonal Bhutra. Here are the headlines for the day. The bulls claw back on the Lal Street. Sensex and Nifty move closer to their highest levels in a month. Financials lead the charge with the Nifty Banking Index hitting a 11-month high. Crude oil prices plunged to 7-month lows, with Brent dropping well below the $90 mark. Gives a fillip to stocks of oil marketing companies. War of words between Russia and European Union over attempts to cap the price of Russian gas imports. Nifty Bank soars 2% to hit its highest level since October 2021. This as bond yields tumble to 4-month lows, courtesy of plunge in crude oil prices. Container Corp holds firm on a swifter divestment hope after the railways unveils a new land license-free plan with a longer tenure and lower rate. But the caveat of competitive bidding keeps analysts guessing. Indigo co-founder and former director Rakesh Gangwal sells a small 2.8% stake in Interglobe Aviation that runs Indigo Airlines. The small slice of his over 36% stake kicks off what is likely to be a gradual drawdown. The stock slips. And here's the lineup of what we have in store for you. It's a packed show today. In Market Opinion, we have Jim McFarty from Nomura, and in Corporate Voices, we have Anil Singhvi, who's the executive chairman of Sri Digvijay Cement. Okay, a lot of action on the Lal Street today, so let's start with that. Sensex and Nifty are now closer to their highest level in a month after the bulls clawed back some of the recent losses. Sensex gained over 600 points and the Nifty gained over 170 points. Bank stocks led the rally, with the Nifty Bank Index ending at its highest level in 11 months. Anuj Singhal is here with the market wrap. Anuj.
Well, the market, the bulls are dominating this market. They, clearly have control of this market. It was visible yesterday when the market made a comeback. And today that comeback was completed. The Nifty was up 1%, but the Bank Nifty really stands out with 2% rally. The Indian market, in fact, has been the best performing market this month and even this year among the larger markets. Weekly expiry of today also helped in terms of short covering, and the Nifty has managed to make a higher closing high, which is something which is technically very positive. As I said, financials did well, so names like Axis, ICICI, SBI led from the front. Cement for second day running, big gains in both Shree Cement and Ultratech Cement. IT also chipped in today with names like Tech Mahindra, Infosys and Wipro leading the gains. The only pocket where we saw some losses today was metals. So Hindalco and Tata Steel were both down. And in the F&O space, some big gainers, Metropolis, BPCL and City Union Bank. All in all, a very strong session.
Oh yes, a very strong session. Anuj, thank you so much for that analysis. Let's get you some market opinion now. Pramod Gubbi of Marcellus Investment Management said that India continues to stand out versus other emerging markets. He also continues to remain positive on financials. Take a look.
I think whether a broader slowdown in the world will affect India, of course it will. We are living in a globalized world, increasingly so. So we will certainly get affected, particularly, say, export-oriented sectors. Will face that demand. If interest rates go up, capital flows and cost of capital will also take a hit. But having said that, amongst all other emerging markets, relatively speaking, I think we do stand out because, fortunately or unfortunately, we don't have a thriving export sector compared to some of our other emerging market peers. I think we have made enough changes as far as reforms are concerned, as far as infrastructure is concerned, as far as our financial markets are concerned, to chart our own course for the next decade or so. I think financials, like I said, is a big theme, given that it plays into rising inflation and as a result, rising interest rates. And if we do believe that we are due for a capex cycle in the country, credit growth should also pick up. We're already seeing numbers that we haven't seen for a long time, 14% non-food credit growth in the banking system. Not sure how many of us remember seeing that sort of number. So we're clearly seeing a benefit both in terms of loan growth as well as margin expansion for banks and better funded NBFCs.
In fact, let's get in more opinion now. Jim McCafferty of Nomura said that Asia as an investment opportunity is a good way of diversifying risks for global investors. He added that India will be a beneficiary of the developments in China. Listen in.
Asia as an investment opportunity actually is a very good way of diversifying risk for the global investor. China is inexpensive on conventional valuation metrics. India, on the other hand, is quite expensive. China, nonetheless, does have a vast number of metrics and tools it can use to manipulate policy and outcome of that. But until we see that in action, I think for now, India is probably going to be a beneficiary of what's happening in China.
Okay, that is some market opinion coming in. But let's move on to the second headline now. Stocks of oil marketing companies soared between 2 and 4% after crude prices slipped below the $90 barrel mark. Manisha Gupta is here with all those details. Manisha?
Well, yes, we are dealing with sharp declines in case of crude oil prices. Good news for India, though, but we are looking at the prices at the lowest in last 7 months. It has been a 5% of a decline overnight, and the prices are where they were prior to the Russia-Ukraine conflict. The pressure comes in on the back of strong US dollar, weak economic data. The Chinese crude imports for the month of August have seen a decline by nearly 9%. And add to that the kind of interest rate hikes that we are seeing globally from central banks. One is expected from the European Central Bank today to the tune of 50 to 75 basis points. We already have seen Bank of Canada increase rates by 75 basis points. And then on 21st of September, you have the US monetary policy meeting as well. And apart from that, the markets also do believe that with the kind of demand growth that we are looking at in this year is weaker than what we saw previous year, also seems to be weighing on, even as Russia says that they will stop supplying oil and gas to countries who are supporters of a price cap. And then you have the EIA report as well suggesting that you are looking at a strong demand growth this year and lower supplies from US. But those factors or fundamentals is something that the markets are not working with right now. So sharp decline, even as we are trading below 90 for both the varieties. Markets do feel that $80 per barrel could be an immediate support for the near term for crude prices. On a week-on-week basis, we have seen 5% of decline for crude. On a month-on-month basis, it is 7% on the weaker side. And that pretty much has been the case with the other crude petroleum products as well. So whether it is gasoline, natural gas prices, all of that trading in the negative on a weekly basis right now.
Okay, so it is a good day for the oil marketing companies. Of course, they tend to benefit if crude prices are lower, which are their major raw material. But, you know, the big story, of course, is the European Union is staring at an unprecedented winter as it braces to impose a price cap on Russian gas in a bid to cut Vladimir Putin's revenue source as the war in Ukraine nears the 200th day. Putin has threatened to halt all energy shipments to Europe if the price cap were to be imposed. His comments could mean that European nations have to introduce energy rationing in the winter months. The EU has already asked member nations to voluntarily reduce their gas consumption by 15%. Russian state-owned company Gazprom has already shut down gas flows through its key Nord Stream 1 pipeline to Germany. CNBC Sylvia Amaro gets us the latest on the European Union stance.
President of the European Commission, which is the executive arm of the EU, Ursula von der Leyen, she said that they want to go ahead with a cap on Russian gas prices. Immediately after that, the president of Russia has said that if that ends up being the case, then Russia could cut all supplies of energy to the bloc. But the European Union does seem to stand firm, and the idea of going ahead with these gas price caps is indeed on the table. Let's take a look at what else von der Leyen had to say yesterday.
We aim at lowering the costs of gas, and therefore we will propose a price cap on Russian gas. Of course, the objective is here very clear. We all know that our sanctions are deeply grinding into the Russian economy with a heavy negative impact. But Putin is partially buffering through fossil fuel revenues. So here the objective is we must cut Russia's revenues, which Putin uses to finance his atrocious war in Ukraine.
Von der Leyen also made it very clear that they want to go ahead with immediate measures to support the vulnerable households and the businesses. And then ultimately, also important to keep in mind that they want to impose mandatory targets on electricity consumption. So these are a couple of ideas that are just getting more ground ahead of a meeting that's taking place tomorrow. But we have yet to see where the European Union is going to land on these proposals.
Sylvia, thank you so much for all those details. And as we speak, the new British PM has announced a cap on energy bills to combat the cost of living crisis in the UK. Of course, the cap is at £2,500. So they are doing things in order to ensure that the electricity crisis or the gas crisis does not impact the citizens as much as it has been impacting so far. But we'll keep getting you more updates on this one. But moving on to the third headline, Bank Nifty hit 11-month high after bond yields tumbled to 4-month lows thanks to crude prices. This surge in bond prices has led to 6 bank stocks hitting fresh all-time highs. Lata Venkatesh is here with the lowdown. Lata.
Let me start with the bonds, actually. You know, the bond yields went to a 4-month low. The new 10-year went to 7.08 and the old 10-year, a 4-month low of 7.13. We last saw that in early May. Now, the yields are down, obviously, because crude prices have crashed below the $90 mark. There is also this increased chatter of India's inclusion, Indian bonds getting included in the bond index. Tax collections are good. The finance minister made a strong pitch that inflation is getting under control, probably seen as a hint to the MPC to be dovish. So all told, yields have come down from a high of 7.6% 5 months ago or 3 months ago to, you know, almost close to 7%. That's a very big positive for the banking sector. So what did we see on banks? For them, the immediate gain, today's, butter, if you please, or icing on the cake is that their bond portfolio, the bond prices have risen and therefore they make more mark-to-market gains. But, what a finish. Bank Nifty 2% higher and 6 to 7 banks hitting all-time highs or 52-week highs today. It was kind of in the making. We have seen a lot of brokerages like Credit Suisse and Morgan Stanley more recently upping the earnings estimates of private sector banks, in fact, all banks, including SBI, BOB, PNB, increasing their earnings estimates on the strength that margins will be better than expected, credit costs will be lower than feared, and loan growth also will be better than expected. And what we are seeing today perhaps is a culmination or a continuation of this kind of optimism on the banking sector.
Lata, thank you so much for joining us and making sense of what's happening in the banking space, which was doing really well in trade today. With that, we'll slip into a break now, but stay tuned. We'll be back in just a bit with the other headlines.